We'll open the meeting and welcome everyone. And I'd just like to pass to Rohan. Would you like to start us with a karakia, please?
Tuia ki runga, tuia ki raro, tuia ki roto, tuia ki waho, tuia te here tangata, ka rongo te po, ka rongo te ao, haumie, huie, karaie.
Thank you. I can confirm that the order of business that before us is, are there any changes anybody would like to make? No, we will now proceed. I've received no apologies, so there are no apologies for this meeting. The interest register is available for people to review. Are there any updates to the interest register that we need to be aware of, or any potential conflicts with the items on the agenda for this meeting? No. Thank you. There is no public forum, I'll confirm that. And we'll now move to agenda item 5, which is confirmation of the minutes of the meeting of the 5th of June 2024. Moved me and Nick, seconded Lindsay, that these minutes reflect a true and correct record of the meeting. Are there any matters anybody wishes arising from the minutes that anybody wishes to raise? Thank you. We'll now move on to the first item on the agenda, Chris, and it's your turn to come and present to us the quarterly internal audit report. Welcome. So, Chris, we'll take the report as read. What would you like to highlight for us in the report?
So through the chair, it was just one audit that I did in the last quarter, and there was no issues found.
Okay. Right. Councillor Rachel.
Thanks, Catherine, through the chair. Kia ora, Chris. I've just got a couple of questions. On page 18, under Officer Delegation Compliance, the last sentence is the audit resulted in 4 medium recommendations. I'm just wondering what those were. There doesn't seem to be any detail about the 4 medium recommendations.
So through the chair, normally I'd provide a bit more information on the high and very high risks, just so that you're getting the right level of information. So that audit I did, I think, about 6 months ago, and some of the recommendations were around communication, so that everyone was aware of how the delegations work. There was also recommendations around increasing the delegation limits in line with, I guess, vaguely inflation. And there was another one that was around the monitoring of the limits, checking that that they had been updated for changes in roles and whatnot. And then the fourth one, I can't remember off the top of my head.
Sure, but have they been implemented or are in the process of being implemented?
So through the chair, those 3 that I mentioned have been implemented.
Okay, and then on the next page, 19, under Commercial Lease Management, the first paragraph talks about it not being feasible due to fragmentation of data. And I just wondered what the kind of mitigation is proposed for that. Like, is there some plan to, pull everything together into a cohesive system so it can be reviewed and managed adequately?
So through the chair, a lot of these leases are like over many decades, and I guess there's been various different systems. The actual revenue collected from the leases isn't that much, and the cost to get a nice system that does everything perfectly has been looked at a few times, my understanding, and it's prohibitively expensive. So there are various different systems that little bolt-on things that are being looked at. And part of when we upgraded our finance system to go to the cloud, there was a bit of a review of some of the items. So it's in a lot better state than it has been in the past, but there's no real plan to fix it. And it is functioning at the moment.
And Mayor Nick, and then I'll Councillor Mel.
Yeah, I had a similar question to Councillor Sanson about the information on the lease management. And what I just wanted to try and tease out from Councillor Sanson's question is that, as I understand the council, is that we've got a portfolio of what I call proper commercial leases, where you own a complete building and you lease it. And then you've got hundreds of these situations where I might have part of my garage onto the road reserve and all these dozens of things that are almost peppercorn, keep the paperwork tidy sort of leases. The bit that I was interested in is when you said, and I'm trying to get a sense of where the documentation system is fragmented. Can I be reassured that in terms of the substantive leases of whole buildings and worth decent sums, that there's a good, robust system for those, and that when we talk about the fragmented system, it more applies to those secondary peppercorn type leases on a large amount of road reserve, those sorts of situations. Can we just get a bit more see-through about the type of leases that are in a good system and those that are in a not? Because it just provides for my level of comfort.
Through the chair, I can speak to that. So, yeah, I mean, we've got this lease module that sits on the Magic system, and it records all our material leases. So what I think Chris is talking about is like, so that I'm confident and comfortable that we've got all the material leases recorded on that system. What Chris is talking about is that when, you know, there might be correspondence and renewals and things like that, and then they're recorded in NDocs, and there's not a great way to link them. So the actual core leases are recorded in a lease module.
Okay, that gives me some satisfaction. The other quick question I had, Catherine, over this financial year, we've had a heap of projects associated with the storm recovery for which we receive NZTA subsidies. In item 3, which was very encouraging, that we see there is absolutely no, a completely clean internal audit on meeting NZTA's contract management, government performance and payment systems. I just want to check, did that include the about $10 million of FAR subsidies and others that we have received through the storm recovery work projects for which we receive NZTA support? Were they included?
So through the chair, I only looked at the actual maintenance contract, which is where a lot of our spend goes.
Yep.
So I didn't look at the whole range of roading projects in general.
Yep.
So the maintenance contract was a large RFP, and so whilst some of those smaller projects, which fall outside of the maintenance projects, I didn't review. This year, I'm currently reviewing the infrastructure procurement, which somewhat will, so that we've got that procurement rule with infrastructure around direct procurement. So I'll be looking at aspects, for instance, some of the roading projects or kind of borderline projects. For instance, the lighting the railway reserve. That's where it's like some NZTA funding, some it was better off federal funding.
Yeah.
And then how was that procured? It can get a little bit grey in some situations. So I'm looking at that this year.
To give context, I've had enormous pressure on Alec and the team to get the storm recovery roadworks done. And I would have been pleasantly and probably surprised if absolutely a complete audit on all the processes, because there's always a trade-off between getting roads fixed for customers and the like. But you've clarified the point, and I'm quite comfortable. But I just wanted to give the context of the question, because actually the pace at which that road repair work has been done on the storm has been very effective.
We noted. Councillor Mel.
Thank you, Chair Catherine. Through to Officer Chris. Thanks for your report. Chris, I'm looking at 5.1 on page 17. References there that the New Zealand Building Consents Authority commenced an audit in June 2024. But then it goes on to say that, will be cleared by September 2024 if the non-compliance, provided the eight non-compliance issues are cleared by that date. Are we on track to clear those 8 non-compliance issues?
I can speak to that. Final button. Delighted to say we are on track. In fact, we've cleared all those issues, and we're now back to a 2-yearly audit cycle.
Right.
So the team did good work.
Thank you for that. Then in your report also, Chris, you reference LOCO, L-O-C-O, a delegations software. What are the benefits of that? And I'm thinking more about productivity per council employee and that type of thing.
So through the chair, I would say that is mainly around reducing the risk where someone challenges us because we've potentially acted outside of authority. So where a decision was supposed to have made by council, for instance, or it was made by the wrong officer. Also, I guess there's a risk that we are doing things very different from what the other councils are doing around New Zealand. So that software helps to sort of standardise things a little bit and bring us better in line.
Thank you for that. There's another point on page 18 that I just want to clear through you, Chair Catherine. Number 5, you reference there too, Chris, that numerous breaches of financial delegated authority were found with regard to officers signing contracts and work orders. So I just really want to know that you talk about breaches there. It said, although not a justification, is that they, the authorisation levels are not, even though they received authorisation, the levels are inadequate. Now that's quite a statement there.
So through the chair, we have reviewed those limits with regards to like how much we're actually spending. You want to find the right balance that is enough governance or checking that that it is being correctly spent by the right level of management. But you also don't want to send everything up to higher management, so you have to find that right balance. So we have reviewed things. I guess like all sort of dollar limits, there's a fiscal drag type of issues, and so we have recently reviewed that. So we're in a much better place, and we have also communicated to the officers in terms of what's required and how that financial limit applies. It's not just to the purchase order system.
Mal, if I may add,
yes,
the senior leadership team have taken this really seriously, and I take a dim view of any officer breaching their delegated authority, and we've had a couple of incidences which we've taken seriously. But we have looked at the delegations, and we've lifted the level of delegation. It was too low.
and we want to empower our staff to make the right decisions. So we have lifted those delegations, but it is an active being actively observed by the SLT to see that those levels that we've lifted them to are the right. And Chris is right. We've got it's a fine balance to get.
Yes.
But I've made it really clear to all officers that you will not breach your delegation. That's a really important fail.
Certainly is. Thank you for that.
So just further to that, Chris, and just thinking out loud, should you actively, say, undertake an annual review so that you're proactive, looking at delegations as opposed to being reactive? So you commented that inflation has been a significant factor, and I saw a cost index, and some have increased 30% over the last 4 years. That's a good example of saying, well, that's going to impact delegations. So what I'm asking you to consider as a council is whether or not you undertake it proactively rather than finding a breach, and review your delegations regularly to ensure that they're right. It's just a bit of hygiene, essentially.
Correct me if I'm wrong, Nikki, but I think we do review that.
Good.
Regularly.
So through the chair, this will be an area that we'll be focusing on, doing on an annual basis, because it is, Chris has some fantastic analytic tools, and it's pretty easy for us to have a look at. So we'll be following through on that.
Just a quick sum for the Chief Executive and for Nikki. So are you quite confident that the level of non-compliance with the delegation decisions, with the adjustment in the levels, will be less for this financial year than they were for the year that's just been reported on?
Look, I think the message has got across that it's not. I think there had been a view that it was okay to breach a delegation. I've made it quite clear that that's just not acceptable, and that will be a disciplinary offence if people do that. So I don't expect to see any. Now, having said that, with a large organisation, there will be mistakes and people may do that. So I'm not going to say there won't be any, but my expectation is that there won't be any. And there's a senior leadership team, I'd say, are taking this really seriously.
Thank you.
Thank you. Thank you. Lindsay, sorry.
Yeah, thanks, Madam Chair. Chris, the question I had first for you was on 5.1, but it's been responded to around the BCA corrective action, so that's cool. My second question relates to the subject that we're kind of talking about now, and I'm reassured by Nigel's comments that actions have been taken to, I guess, reduce systemic challenges around delegation, non-compliance or breaches. My question really is there a risk, either historic or sitting in the future, associated with an entity failing to fulfil an obligation or pursuing an entitlement as a consequence of an officer's failure to exercise a delegation? For example, just questioning whether or not an account due is payable because it wasn't properly authorised. Is there a provision in the delegation manual to deal with that, or potentially to say something along the lines that, notwithstanding a failure of an officer to fulfil their obligations under the delegations policy, the council will stand behind the financial obligation or commitment that they have created?
So through the chair, I'm not entirely sure the question. Is the question that if an officer doesn't follow their sort of duties and roles and responsibilities, and then there's the outcomes from that, and what does that mean in terms of liabilities? Is that your particular question? So through the chair, part of the increasing the limits is also to enable people to make decisions rather than leaving it to someone else to make decisions. But if we do have your rogue employee and they've signed things on behalf of Nelson Council, and is that legally binding? I guess that will come down to the specifics of the case. I think with any money spent, there's always going to be a little bit of toing and froing, and hopefully it doesn't go down to to lawyers. Generally, in these types of contractual situations, this is one part of the contract. There's also other parts where there's, in terms of what's delivered and what's not delivered, and we would hope that there's other processes around. It's not just the signing off, but ensuring that relationship between ourselves and the contractor is a good relationship, so things don't get to a situation where we're looking at lawyers and whether that was legal or binding or not.
I guess just to follow up, Madam Chair, what I'm suggesting is have a think about not the rogue employee necessarily, because there are mechanisms for dealing with them, but the honest mistake, and ensure that the obligations that are purported to be created can be met, and potentially having a backup somewhere in the policy framework along the lines that the council stands by the officer's decision, notwithstanding X, Y, and Z, however you might want to frame it.
You may have noticed it as the acting C, Lindsay, there was a tendency to shift everything to the top when I first arrived. Literally, small decisions around a few $1,000s were coming to over my desk, and I've really squashed that and said, look, I've got a delegation, and I expect those with delegations to do at the right level. So that tendency it was the wrong way around in many ways, that people weren't exceeding their delegations. They were just being lazy and chucking it all to the top. So I don't know if you experienced that in your 3 months, Lindsay, but I certainly did when I first arrived.
Can I, sorry, and through the chair, can I just make it really clear though that there's a difference between people signing contracts. The actual purchase order would have been signed off by the correct delegation. So from my perspective, the obligation sits with council to pay those contracts, because it's just a mismatch between someone physically putting a signature on a contract versus who actually has the financial delegation. And the financial delegation system is automated that only people with those levels can sign.
Can I just suggest that it's an interesting point for you, Chris, to reflect on in your role as internal audit, and to consider how you can give this committee confidence that it is being well managed, it is under control, and that we know that you're keeping an eye on it. What I'm hearing is I'm getting that assurance, but it's always something that you need to just keep your eye on. So if you could do that, we would appreciate that. Okay, thank you.
Would you like a member of the report?
Yes, there's a recommendation that we receive this quarterly report. Moved Mayor Nick, seconded Councillor Mel. Let's now move on. Thank you, Chris. Now let's move on to the next item, which is the quarterly risk report. And Chris, over to you again. Take it as read.
Through the chair, yeah, take as read. I guess a big part, there's a bit of an insurance update, and I'm sure there'll be a few questions with regards to that.
Nick.
I've got a couple of questions. Firstly, on 4.3, with respect to the high risk rating around Lifeline, and then on 5.3, it may be these are appropriate for Alec to answer. Obviously, and we marked the 2-year anniversary of the storm event on Friday, and I've been hugely encouraged by the amount of that work that we are getting done, starting with the main water mains and the state highways and the roads. My question for Group Manager Infrastructure is, as that work progresses, when would we expect the Lifeline services failure risk to get below the high? I can understand immediately after the event, you've got a whole lot of landslides sitting here that are half fixed up, and there's a risk, you've got roadworks being done. What would be the expected timetable relative to the recovery works to get that Lifeline services risk coming down, Alec?
So through the chair, I think it's two parts. If I was purely looking at recovery, I would say that the risk rating is certainly not high. We are well on track to facilitate the recovery and ahead of our expectations in terms of lifelines. I think the bigger issue addressed here is in terms of the wider lifeline services risk. I think I'm unsure that risk rating will come off high purely because we're dealing with infrastructure that has the ability to affect delivery to its customers in the case of an event. So that's why I'm divorcing the two. I think in terms of recovery, I would say that the risk is certainly low with respect to our lifelines, but in terms of the bigger picture with regards to lifeline risk, it will always be high purely because of the effect of what a damage to a lifeline in future events can result. Does that make sense?
Can I just tease out, Alec, a little bit further from my understanding? And that is two supplementary questions. The first is, so what was the lifeline services failure prior to the large August 22 event? And my second question is, at what point in our flood recovery work would you be comfortable in saying that the level of risk from the specific damage of that storm event is to the point where it is back to at least as good as pre-August 22? That is, much of the investment, about a third, is for betterment. And so you'll get to a point where, as a consequence of that better investment, actually we're in better shape to manage these risks pre-August 22. So was it at high pre-August 22? It's just that the nature of lifeline services are that they're always at high risk. And then that second bit as to where do you think we can say to our community we're in as good a shape as what we were pre-August 22?
So through the chair, the first question is it has remained at high. It isn't, and that's what I was trying to articulate. It's the nature of the lifeline risk that I manage. It is front of mind of everything that we do, and it is a high risk rating. In terms of the second question, as I said, we are well advanced. I think there's a number of works have already been undertaken. A number are on site in relation to dealing with slip works originating from council property, and there's some work that has yet to start but is about to start. To answer Menek's question, I think that the current risk is probably low. If we get another event while we're on site and the area is construction site, then we run the risk. But as we are at the moment, I'm feeling fairly confident that the risk with regards recovery in terms of the work that we're doing is manageable, and that is certainly not at a high level, probably medium to low.
The second topic area, and I'm happy for you to go to others and come back to me, whatever your preference is, Madam Chair, is in respect of 5.3 and the note around the tenders on construction work. What I wanted to tease out from our infrastructure manager was how much more competitive. I'm getting signals from the civil contractors that they're at the point where they're actually laying staff off. Is there, we've all been shocked, and I've seen reports in the last 48 hours in the newspaper of sewage project up 40% over the last 4 years. Roading contracts costs up 50%. It seems that with the shortage of work, we're starting to get some good competitive bids in. I'd be interested to just get a bit more information about how good, and the second supplementary off the back of that, is there any opportunity for getting really good prices to get a bit more stuff brought forward, one, so that people aren't being made redundant, but also to get some good value for money for the ratepayer while prices are competitive?
Interesting questions through the chair. So I can certainly say that it is a council market at the moment. We're in the driving seat, and we've certainly seen a lot more contractors putting in bids. 5, 6, 7 at a time. And that is an indication of the slowdown of the subdivision market. I've been in this game long enough to know that there's swings and roundabouts. Sometimes it's not in council's favour, other times it is. We're in that dip now where it's certainly in council's favour in terms of the prices and the people are bidding. And from the group infrastructure manager's position, it's always good to see a lot more prices come in, that they're competitive. But there is a case, and we've all been reading in the media that they are struggling. I'm meeting with the Contractors Federation, I think tomorrow, my usual monthly catch up, and no doubt they will bring this issue up. In terms of, so council's in a good place to answer your question. In terms of the second question, could we bring money forward? Look, we've got a massive capital works program on our table at the moment, and that's just got even bigger with the money that we've just received from central government. I will know. My initial feeling at this moment in time is to bring money forward. I would need to do some more work, because that would really make a really ambitious capital works program even more ambitious. But I do understand.
Your problem, Alec, is you've got an ambitious mayor in council that wants to get stuff done. Just the last little tease question off the back of that, and this may be for Nigel as much as it is for Alec. If our infrastructure team saw the opportunity for bringing some of those big items in the LTP forward, because we were getting such competitive pricing, does the council executive have the flexibility to do that, or does it require governance decisions? Now, I only wanted to do it in the event, and I accept Alex's view that you've got internal capacity issues about getting a capital works program done, but I'm also keen to understand as to when something's in the LTP, it's in year 3, let's say there was an opportunity to bring it forward to year 2, what is the role of governance in the timing of those projects in the LTP?
I would need to bring that to council table to bring that forward.
Bring such forward.
But we had a very good discussion yesterday in our transformation meetings around the capacity for us to do those types of things, and we don't yet have that capacity. But when we transform this organisation, we want to make sure that we've got capacity to do those types of initiatives. So we're currently working at about 105, 110%. We should be working more at about 80%, and then we can bring some forward, and we can seize on things. We've got internal capacity to move things forward. We certainly, and Alex right, I don't foresee bringing any papers to council to bring big projects forward at the moment, Nick.
Okay, thank you. That's my questions.
Councillor Mel.
Thank you, Chair Catherine. Chris, I was really heartened. Well, no, when I first read this item 4.7 on page 21, the heading doesn't do it justice, quite frankly. Council's work compromised by loss of and difficulties in replacing skilled staff. And then I go on to read it, and it reads so well. And it's reassuring, because you and we all know that the people in this building, our staff, are the greatest asset. And when you read this from the manager, people and capability, turnover is starting to ease. Critical roles which had been vacant for long periods are now filled. Training, inductions, establishing relationships within the organisation is now a key focus to ensure that new talent is retained and can thrive. Now, that's excellent. I've got a couple of questions around this, though. Do we do an exit survey of those staff that do vacate their roles and move on?
Through the chair, this probably isn't really a question for Chris, but yes, we do exit surveys. So, but it's voluntary, obviously.
Yes, okay. But then when you read this closely, as I did just now, the word most is in there, most critical roles. So I suppose someone could answer that too, have been filled. Is this the case that we're most, not all?
Those that we can afford to fill now, we're able to fill, and we are, holding off on filling a few roles because I'm taking a view that we want to keep rates to that's where they need to be. So look, we have got a few vacancies which we're deliberately holding at the moment until we go through the transformational thinking that we're going to be doing early next year. So, but yes, we can fill for the most part. We can fill most of the roles. I think it's worth adding. We do an exit survey, but most importantly, we do an on-entry survey. And Andrew's got a really good program that people, after the first week, they check in with the manager and somebody from people capability. After the first month, they check in again around how the induction has gone. And after 3 months, so in other words, how are you feeling and settling into the organisation? How are we inducting you? I think it's a really good program.
Fantastic. Thank you for that. I'm reassured.
Right. Are there any other questions, comments? Councillor.
Just on the insurance question under 6, with respect to the change in function between the port company and the council around the harbour master and the liability, and Nikki, this may be one for you as much as it is for Chris. Someone has to manage the insurance risk that a dumb decision is made and you end up with a wreck and somewhere like the cut that has enormous economic implications. Do we liaise with the port company, because they will also have insurance for such things, to make sure that we're not double insuring for the same risk?
So through the chair, so we've always had the harbour master insurance, even when we had it delegated to the port company. We were effectively double insured because even though we had delegated the function, we still ultimately carried the risk. So this isn't a new insurance for us. We've always held it. I'm unsure. I don't think the port would hold harbour master cover now because we are effectively the harbour master. We're holding the function, but I'd need Mandy to confirm that.
Okay. Thank you.
Are there any other questions? Okay, the recommendation then is that we Audit, Risk and Finance Committee receive the quarterly report.
Happy to move.
Move Mayor Nick, seconded Council Rachel. All those in favour? Aye. Thank you, carried. Thank you. We now move to agenda item 8. Thank you, Chris, for your presentation. Prabha. Quarterly finance report. Yeah.
So through the chair, I was just going to do a quick introduction on the report, just to give a bit of context around our position at the moment, because there's obviously a lot of moving parts, and I want to make it clear that this is the draft finance report at the year end, and there are a couple of major accruals that are still outstanding, basically for the NRSBU wash up and the vested assets. So what actually happens in terms of the process, this is just to give you a heads up on what our draft position is. We bring the draft annual report to the next, so we have an extra ARF committee meeting in September. We bring that to you for approval to effectively release and get audited. And then obviously the final annual report then gets adopted by full council prior to the 31st of October. So in terms of, there's lots of moving parts in the finance report. There are a number of accruals that haven't occurred. I suppose the key variances for this year, and you'll pick up the flavour, and it's been a really common theme through the development of the long-term plan, is really interest rates are up, depreciation's up, and insurance costs are up. So those 3 in total have contributed 5.1 to the variance and the operating position. So yeah, we're both happy to take any questions.
Councillor Rachel.
Thanks, Catherine, through the chair. Kia ora, Nikki and Prabhath. I've got 5 questions. Page 47, 4.16.4, it talks about the risk pool claim. And I just wondered if the exposure to that still exists.
So through the chair, my understanding is there's still potential that there could be a further claim. in the future. The letter that we had, it basically hasn't kind of closed off yet. So yeah, there is still continuing exposure, unfortunately, from when we were a participant in the risk pool.
So is there kind of no end date or kind of, extinguishment of that exposure? I mean, how does it?
So through the chair, there will be an end date. I think it's just the fact that the claims take a long time to actually get to court and settle.
Okay.
So there is this kind of a really long tail on it. Unfortunately,
But there's not going to be any exposure to new claims from that historic.
No, because we'll be outside the statutory period.
Great.
So it will, because the statutory period's 10 years and we pulled out in 2010-11, the tail is kind of going like that, but it's still there, unfortunately.
That's great. Thanks. On page 49 at 6.3, it just talks about the drawdown of Housing New Zealand funds of 2.5 million. And I just wondered what Housing New Zealand, is that a typo or are we drawing down Housing New Zealand funds?
So through the chair, when when we sold the social housing to Kainga Ora, we held a portion of funds in an account for them to draw down. I think it was about 5.2 million.
Yeah, it was 5.3 million in a trust account.
So we basically hold those funds in trust accounts for their renewal program, and they've drawn down on that. And I suppose we didn't know the timing of it, so it sort of impacts that cash flow.
Okay, that's really helpful. Thanks. So they've drawn down 2.5 million, so there's a balance remaining.
Yeah, absolutely. Okay. I think that was the only drawdown we've had.
Yeah, that's right.
Can I just...
Sorry, I've got a few more questions. Page 55, just under the Treasury summary, there's the 4 ticks. And under the investments, the other 3, it just talks about when it's compliant until, like compliant until May 2025 or June 2025. But under the investments, it doesn't say, it's got a tick, but it doesn't say compliant or any date. And I just wondered if that's a like intentional or unintentional. I know it's a PwC report, so we might not know, but would it normally show that the investments are compliant until a certain date?
Through the chair, I can answer that question. So we have some compliance requirements for the investments as well in the policy, but in terms of the dates and stuff. So that's more like the counterparty compliance check. So yes, we are in compliance with the investment as well. We have only 20 million term deposit at the year end.
And then on page 58 and page 66, these questions are related. I'm just wondering where the I guess where forestry is captured under this, so how we're measuring its performance, because there's no reference to it at all in any of these performance measures. And obviously, it's been an area of significant interest, and there's been a lack of governance oversight for the last 2 years, and we haven't had any governance committee or subcommittee. So I would have expected to see some performance measures around the forestry in this table.
So through the chair, these are the performance measures that were set by council in the last long-term plan.
Yeah.
So we're just reporting against those.
Okay. So I probably raised it then. I mean, I do think it's an area that we need to have governance oversight of. And then the next one is just under the project health summary. I gather that obviously this is historic, so looking back for the last quarter, and we've just agreed the forestry transition. So I'm assuming that from this new quarter onwards, the forestry transition, which has, I think, a budget of around 10 million for this LTP, that it would appear in the project health summary. So I'm just seeking some assurance that it will appear here going forwards.
So through the chair, we haven't even looked at that for this first next quarter's report. So
I think so. This through the chair reports on major projects. If this committee would like to see forestry as part of the project health summary, we can do that. But this is certainly looking back from up to what was previously. So the next one that will come, we'll see a lot of projects come off here. It'll show the new projects. It normally wouldn't have featured forestry, but if you want forestry on this dashboard, we can do that.
I think it's really important that we remember we're talking about forestry transition. So it's the transition from commercial clearfell forestry to permanent forest restoration. And I think it's a significant project. It was the item that received the most submissions during the long-term plan. It has a high level of public interest, and I would absolutely expect that it is reflected somewhere in our governance report. So, you know, I'm seeking an action that the forestry transition is included in the project health going forwards.
I just think, I know 10 million sounds a lot over the 10-year plan. I'd remind us that the council's total expenditure over the next 10 years is over 1.6 billion. And so if you want to give this $10 million this level of scrutiny, then you're effectively going to have 160, if you're going to take a proportionate approach over it.
Well, I note that the Glendowan wetland is $80,000, Stoke Library roof remediation $580,000, Buxton Square toilet renewal $105,000, Te Hunanui. Like some of these are very small amounts of money, so I don't think it's an inappropriate request.
Well, I'm just of the view that council's made a decision that we're going to transition. Quite happy to make sure through the 6-monthly reports that is properly reported on the progress. But I always want us to reflect that, our commercial forestry business is over 600 hectares, which in the forestry sector is piddly little, and that the governance oversight is proportionate to the level of activity. So I'm quite happy to make sure that there's a reporting process, but want it to be proportionate to the level of activity it is. Councillor Sanson's quite correct. Council's made a decision to make a significant change in direction. There's been quite a lot of debate on that. We now need to have the processes to make sure that we can monitor that change, but I don't want to overstate it relative to the scale of 10 million out of 1,600 million.
Councillor Rachel?
I would just like it noted in the minutes that I am not happy with the current level of governance oversight, and I would like to see some response to elected members in terms of how there is going to be governance oversight in this area, because I'm concerned about the current decisions being made which don't reflect, in my view, the direction decided upon by community and the governance table.
Yeah, and the decisions about governance ultimately rest with myself as mayor. And we have made a decision, and that is that, and this was a collective decision that was made by the council about the governance structure that we would have for this term. And we reviewed that earlier this year and reconfirmed that. And the mechanism that we put in place earlier this year is that each of our key infrastructure managers across the environment regulatory team, across the infrastructure team that includes forestry, and across the community services team would provide a 6-monthly report on all the activities in that area. And in my view, that is the governance decisions that we have made about the level of scrutiny. And I will ensure that Councillor Sanson, through that mechanism, has the opportunity for scrutiny in this area. I think where the frustration is it is true that during the previous term of council, there was specifically a forestry subcommittee. But the council made a decision at the beginning of this term that we weren't going to have that level of micromanagement in a relatively small area for council. Quite frankly, if you were to have a forestry committee specifically dedicated for this, what I think is a relatively, well, it's certainly less than 1% of council activities, and you want to be proportionate, you'd have over 100 governance committees, and that's not the way in which the council has set its direction.
Respectfully, Mayor Nick, I'm not sure that, like, we have had 6 monthly reports from infrastructure and parks and reserves, and I don't believe that forestry has yet been included. So there's a missing, you know, there's no governance oversight happening, not even in the structures which have been set up for this term. So I'm just highlighting that I think that there's you know, a blind spot here for the governance table. I think there is some risk. I think there's reputational risk, and I just think we need to ensure that that kind of loop is closed.
And my response to that is in the 6 monthly report, with the issues that you've raised, Councillor Sanson, I'm sure they've been heard by the Chief Executive and by the Infrastructure Manager, that in the 6 month report, which is the first 6 months, post the significant changes in the recommendations from the Forestry Right Tree, Right Place Task Force, the first 6 monthly report will come in February next year, but I'm sure that the Infrastructure Manager has heard Councillor Sanson, and in the 6 monthly report to come through will give some signal of that work when that comes through to Council next month.
And I'll now comment. Look, I've taken on board what you said, Rachel. This transition is really important and quite complex, quite challenging, and of course there needs to be some governance oversight for that, which is a matter for the mayor and yourselves as elected members. So it's not for me to comment on the governance, but I hear what you say. But please do bear in mind that the LTP has literally only just been signed off, so we've literally only just got approval from the public that we are going to take this forward. I take this really seriously.
Thanks, Nigel.
Yeah, and it's going to be a lot of conversations to be had.
I think
it's a long-term program. We're just getting started, but it does need oversight and commentary.
Agreed, but there is currently a planting plan imminent, which I don't believe is in alignment with that decision.
Don't forget. No, it is. Don't forget the discussion around the transition is. This is a long-term. This is a 30-year program. We've got a contract with Pierre Folson until 2027. The recommendations from the task force that we transition out of commercial forestry. It wasn't overnight to stop commercial forestry. So I've got a contract through Alec with Pierre Folson. There are some operational decisions, and indeed we've taken direction from the Right Tree Task Force so we're not planting pinus radiata at all. You know, we've stopped that. We are making some operational decisions to plant some different types of trees.
Commercial.
We're doing no commercial.
Activity?
We are doing no commercial planting.
Okay, so I mean, that's reassuring to hear. However, it seems that the planting is being undertaken in a commercial manner, high density monoculture.
No, let me just be clear on that.
In a sensitive environment.
I'm going to provide an answer to your question, but actually, I used to own a forest, believe it or not. And when you plant, you always plant a lot more. You know, you expect to get some loss when you plant. So this is not. I can assure you, this is not commercial planting. We're going to provide a response to your question around the number of trees, but it's not the intent to have commercial planting. Unfortunately, my expert is away at the moment, but we will. But the number of trees we're planting, I'm assured, is best practice in terms of getting the right coverage for these. But it is not commercial planting. I'm happy to say that on the record.
So just to summarise, I note your comments, Councillor Rachel, and the commitment of the officers of council to ensure that you receive a report. It is included in the 6 monthly report that you receive, and that you've also had some of your questions answered and responded to today. Thank you. All right. Are there any other matters any members of the committee would like to raise in relation to the finance report?
I just had a question for Nikki with respect to the delayed payments from IHL in the financial year ending 30 June 2024. Was it expected that as a consequence of the new IRL structure that there would be a delay in the dividend that we would be receiving from them? And I know when you've got an arbitrary date like 30th of June, if it's a month or two, it's only really an accounting thing. How many months is the income stream from our trading entities through IHL being delayed? And I've also got my mind on the fact that we're paying about 6% interest and I'm thinking I'd like the money in our bank account as quickly as possible. So a little bit of background on that would be appreciated.
Thank you, Nick. Good questions. As you'll be aware, the IHL board were working on their new dividend policy. And typically what has happened previously is that the subsidiaries have declared on the 30th of June and paid kind of in that first quarter. They decided it's a lot cleaner with the dividend policy to declare and pay in the same year, so you don't get any sort of timing mismatch. My understanding is it doesn't actually impact the cash flow timing. We're still expecting the interim and the final dividends at the same, similar times. It simply is an accounting issue which it's created. And as you'll be aware from the Joint Shareholders Committee, they really only developed their dividend policy very late in the financial year. So I wasn't aware it was going to cause a timing issue until.
So can I just, because it is going to flow through and in effect on the annual report, in that effectively for the financial year 23-24, will it show no dividend, and for 24-25 effectively show 2 dividends. So the chief executive will be able to claim a big improvement in performance. Yes,
I'll take personal responsibility from now on, Nick.
Yeah. It's not his fault that the figures are 3 million worse for last year, but he's going to claim the credit for having double in the next year.
Yeah.
All right, I understand.
Jolly accounting rules.
Yeah, and it's all to do with the date that it was declared, not having been declared by the end of the financial year, not when we get the cash, so no impact on interest, but an arbitrary accounting effect on the way, which will distort a bit and make last financial year look a bit worse and this financial year look a bit better when the reality is 0.
Absolutely, and then it'll be fine going forward. You'll have it declared and paid in the same year, and it'll be the same number.
Why I didn't want to be an accountant.
Rest assured, when I first saw these numbers, Nick, I had a similar heart attack to probably what you had, and Nicky was so calm and relaxed that I thought, oh, I can stop stressing about it.
Thank you.
Sure,
This year.
Councillor Mel, you had a comment.
Yes, well, I was going to ask that question later on in the tax one, but I'll ask it now. You see, it said in there that 4.21, the annual tax update, I'm going to jump ahead like Nick's just done. It references, and I asked for some explanation around the reorganisation of IHL's structure. And I thought, hello, I don't know, I've never heard of that before. And then, of course, Nicky says, well, there's been a change in dividend policy. So, quite frankly, I'd like to be enlightened Bath on both those points.
It may be helpful for Councillor Courtney for me to be relatively open because it is my preference to be that way. There has been a discussion between the chair of IHL and the 2 mayors as to whether the structure of 3 boards that was always established as a transitionary board of having a board for IHL and 2 separate boards for Port Nelson and the airport company.
Yes.
The 2 mayors have asked our council executives, including Nicky here and Mike Drummond at Tasman, to do some work as to options for discussion with council. This was clearly flagged when we set up IHL, that, as you're aware, half the board of IHL is from Port Nelson, half is from the airport company. And it was flagged that that was a transitional arrangement.
Yeah.
And so the 2 mayors have asked our council executives to do some work as to what the future might be. That's early. If you ask my expectation, I would expect it to come through with some reporting information for the next shareholders meeting of the joint councils.
That's very significant, and I appreciate being briefed on that because there is a gap there in communication, I think, in respect to that. No question about it. Very important, this bringing the 2 companies together, particularly when the airport didn't want to participate.
No, can I be really clear?
You have been up to now.
Yeah, no. I'm just I'd like to be open with council. No consideration is being given to a single company. right? Be absolutely clear about that.
Yeah.
That is the separate Port Nelson and the separate airport company. That is not being asked to be reported on by officers. What's been asked to report on is the board structure. And that is where you've got the board of IHL effectively made up of 50% from the directors of Port Nelson and 50% from the port company, and whether there is a better board structure to support the two companies.
I see.
And that is the piece of work that we have asked for. And I stress, we've asked for options to be explored.
Right. Well, thank you very much for that. I appreciate that, and I bet you do too, Madam Chair.
Thank you.
I'm sure you do too.
I am interested. Thank you.
You're interested? Yes, we should be.
Thank you.
There could be a risk involved here that we've got to manage.
And I
I'm
would
no
not-
longer involved, though, as you know.
Yes, I just reinforce that piece of work was clearly flagged when IHL was set up, when it said that this is a transitional arrangement, and now we've got that all settled, of which the last piece is getting the dividend timing right, then it's an appropriate time for us to have a look at. And the reason it's important is that we've got board appointments coming up, Councillor Courtney.
Yes.
And if you were going to make any change, you would want to align that
Yes.
with the Joint Council Committee's board appointments process.
Good. And two, can I ask another question about the dividend policy change? Can I be enlightened on what that's the background of that, please?
Through the chair, the draft statement of intent for the consolidated IHL group always stated they needed to develop a dividend policy as part of, you know, combining the entities into the holding company. And there is, you know, it really is just simply a timing issue between declared, you know, they just want to be able to declare and pay in the same financial year. So there's nothing.
And there's one dividend coming from IHL and not from the port and the airport.
Through the chair, yes, that was always the intent of the structure. The dividends would flow through to IHL and then being paid back to the shareholders.
Thank you.
Councillor Rachel.
Thanks, Catherine, through the chair. I've got two questions, or a question and a comment, but just following on from Mel's question, I had the same question. I was surprised to see this, and just curious as to if the intention, one of the options being considered is just to have one board across the two entities, and maybe me and Nick could answer that, seeing he's obviously leading this piece of work.
No, it's not fair to say that I'm leading this piece of work. I've chosen that it was a decision that was discussed with Mayor and the chair of the holding company. So it's as much being led actually by the holding company and the fact that council, when it made the decision to set up the holding company, would do the review. I don't want to preempt what those options might be.
Sure.
All I would say, it is an unusual structure to have the holding company having effectively all of the directors of the two companies. We've got board appointments coming up. It is a useful time to check it. I will be quite open, and that was, we had in June the retirement of the chief executive of the port company, and we had the resignation of the chief executive of Nelson Airport. The chair of the holding company raised the issue with the mayor, with the two mayors. Did we want to explore a merger of the two companies and having a single chief executive, simply because you had both positions vacant at the same time, and that would be a useful time to do it? Myself and Mayor King signalled that no, we did not think there was an appetite for that. That had been well debated at the time LHL was formed, and the clear view from both councils was that they were separate businesses. And it was those two resignations that said, but we do want to get on and do the work that was signalled at the time IHL was set up, to explore whether there were other board options. And that's the piece of work we want to do.
Thanks.
I don't want to
just intervene.
Yeah.
I don't think this is a matter for actually this committee.
No, that's
I
fine.
understand, and I think it needs to be taken offline. So I don't think I'd like to us to move on.
It's fine. It is an item in our report, and I think.
So sorry, through the chair, I think the wording, are we talking about the tax report? That wording just says is in relation to the setting up of the holding company structure. it shouldn't have had the word reorganising. the
Right,
holding
yeah,
company,
and I think
so-
I just don't
Yeah.
recall there being any intimation that the structure, the governance structure was going to be reviewed. I thought it was just membership of the board, so I'm a little surprised at the work that's underway.
Okay.
But I just wanted to comment on it's on page 69 at 7.
So sorry, can I just say that we haven't actually moved on to the tax report yet? So can you park that until we move on and go back to, I know we've jumped
Sorry, I
forward
thought
and around and I'm
there'd been
a bit,
questions.
I don't want to be confused either. So let's move back to the quarterly finance report and we'll take your question, Rachel, Councillor Rachel, at the time that we go into the tax report. Thank you very much. That would be great. Just in relation to back to the finance report, Prabhath, you've been very quiet. We haven't asked you a lot of questions, I must say. Prabhath, I was delighted to see the report on page 52 relating to the subsidies and grants, given that this is an area where I was being relatively new to this committee, interested in the amount of funding that the council receives really through central government. So this is how it is reported to council, that we receive capital grants and operating grants from various government agencies or central government, some of which are capital. And I think if I look at your report and summarise it, the capital grants that we receive are in the order of about 13 million, and the operating grants are the same. And I'm interested in understanding that, because we show the capital grants as revenue, but the expenditure then comes through the balance sheet, whereas the operating grants. Can you just explain to me the oversight and the management of these grants and the reporting of them, because they have quite a significant impact on council's income and expenditure? I want to just talk a little bit about that, please.
Through the chair, that is actually right. Again, jolly accounting rules. So the operating grants and expenditure is on the P&L, because the income and the expenditure will be reflected on the same basis. But for the capital grants, we have two treatments. Either we can offset the grant income from the capital expenditure and then recognize the net amount, or we can recognize the income as income on the P&L, but as you said, the expenditure will be on the balance sheet.
Yeah.
So our accounting policy is that to recognize this in the second way. So we recognize the income and recognize the asset on the balance sheet. The net impact will be the same, because the depreciation will flow through as the gross amount, whereas at the first treatment, it will be the net amount. So that is our accounting policy. That's why we recognize that way. But there is a mismatch of that treatment.
A supplementary question. So what are the challenges for you in the council as officers in managing and understanding this particular revenue stream? Because it looks to me as though it is at times can be withdrawn, can be not given, or so how do you manage it in a way that's transparent and clear to everybody what's happening here?
Through the chair, some grants are retrospective. We first spend the money and then we claim the money back from the government.
Right.
In that case, we have finance business partners who looks after individual business units, and they get in touch with the managers and ask these questions as part of the quarterly forecasting. And if there is a variance, they just ask whether, we need to recognize any more grant income for this. And that way we kind of keep a track of all the, grants that need to invoice for or bill for. And yeah, that's how we do it. But it's quite a manual process.
Is it risky? is there a risk associated with this particular? So I see your budget was 28 million, and actuals are actually budget was 30 million, actuals are 27. How do you actually manage that risk? Because there's a $3 million, if you like, variance there. How do you actually manage that risk?
Through the chair, we look at the finance reports every month just to see whether there are any significant variances, and then check with the business unit managers to see whether that is correct or whether there is something missing, just to make sure that the completeness of the grant income as well as any other income sources.
Yeah. And some is carried forward through you. Officer Nikki, you might like to add.
Oh, so through the chair, I was just going to add, yeah, I mean, obviously, where the money isn't spent, we carry forward both the capital expenditure and the grant income. And you'll see in there that there are a number of grants that relate to projects that have been delayed. The comment I'd also make is that the finance staff are heavily involved with the Waka Kotahi monthly claim. You know, that's a really key source of funding for us. You'll note through there's a lot of Waka Kotahi funding. And I suppose the biggest risk around some of those claims would be where we assume a higher FAR rate than the standard one, and potentially, if that doesn't occur for flood events and things like that, that would be where I would consider the biggest risk through those claims.
Very helpful, thank you. Councillor Mel, you have a supplement?
No, well, I'm just going to ask a question on this particular report.
Thank you.
I'm coming back to that now. I digressed. We digressed on. Might be the thing. Officer Prabhath, I want to talk. There was governments expressed some appetite, a desire to self-insure in some areas. So I'm talking about insurance now. I'm talking about 4.16 insurance on page 47. And I just want to know whether we've started to move on that and look at areas where we could possibly self-insure, and when will it? And have you really already started that? Is it showing here in this in these figures now, or?
So through the chair, I'll just jump in here. So yes. There was a project, an insurance optimization project. What a great name! And that was covered off in the previous risk report from Chris Logan. So he's the more appropriate person to answer those questions. So the previous report on risk covered off our insurance renewal as at the 30th of June. So the comments are in that report.
Right, there's a difficulty here because I've now got some questions on transport. In the 13 deaths last year and 3 more than the previous year and these sorts of things. But I think I'm going to be told that there'll be no one here to sort of answer those or react to that. Is it fair to ask Prabhath that can he comment on page 28 on the transport and the fact that we have the row 13 deaths, 3 more than the previous year? I mean,
Isn't that, I would feel that rather than that being a topic for the Audit and Risk Committee, that is absolutely a proper area of scrutiny, but that is the very purpose of the 6-month and annual reporting process that we have. Right. And that to me is really about the performance in the transport area going a bit beyond the bounds of the Finance, Audit and Risk Committee. So my preference would be they're absolutely legitimate questions, but that's exactly the reason why we have the 6-month operational reports from the key areas of council. That is infrastructure, planning and environment, and from the community services team.
Thank you, Nick. Thank you, Nick, for that clarification. But there is a whole page here on it, and making a number of points. And I'm disappointed that I cannot get those answers now because, 13 deaths and 3 more than last year. I'd like to know where those happened.
Sorry, can you just help me here? Sorry.
Righto, that's on page.
You on?
I'm on page 58.
58. Sorry.
And the page is all on activity transport. And there's 1, 2, 3, 4, 5, 6, 7, 8, 9 matters raised there.
This is in relation to the performance reporting against the objectives.
It's a quarterly finance report.
Yeah, I'll pass that across to you, Nikki.
So through the chair, I mean, this report is here for the Audit, Risk and Finance Committee to monitor our delivery against those performance measures that were set in the last long-term plan. Alec Levertis is here as Group Manager Infrastructure. I don't know if this is just, have we met the target, have we not? I don't know if we will have the detail of that.
So through the chair, I don't have that detail with me. If that is something the councillors wish, we can provide that. I from memory, I think I did provide those details to all councillors, and I recall that before I went on leave. And I'm happy to dig that up and send it through to the councillors and the Audit, Risk and Finance Committee, where it shows us where we had those 13 deaths. And the reason I had sent that previous advice through was for us to look at what the issues were. So, for example, they could be related to drink driving, drug, light sun blindness, speeding, wet conditions, etc., etc. I do note that we are reporting on the measure, and any death or serious injury is not something we like to see, but we purely mentioning them for we have to mention them, but a lot of those are out of our control, where no matter what we do on our roads, they are related to speed, alcohol, a whole range of issues.
So, Councillor Mel, Alec has offered to provide you with the information outside the meeting. Will that work for you?
That'd be excellent. Thank you. I really appreciate that.
Thank you. Right. Are there any other questions on this particular report? Yes.
Just perhaps a question on the same page. The transport efficiency measure is noted as not achieved, and I've looked at what the words say, and it appeared to me that it hadn't been measured as opposed to not achieved, but I'll just leave that one for folk to have a wee look at. My question for Prabhath, 66 Prabhath, if I could, which is the project health table. I just wanted you to confirm, or otherwise, that my understanding of that table is correct. Is it the case that the outturn cost for all of the completed projects has come in within budget? And is it also the case that the forecast outturn cost for those projects still in process is forecast to come within budget, except for the Tahuna Beach contamination work?
Through the chair, so the strategy team sort of collating this document, the project health summary. I cannot answer that question. I'm sorry.
So through the chair, the intent of this reporting is to you would be flagged if there was an issue with projects not coming in within budget. Noting that a lot of these are actually multi-year projects, and obviously, this is just really looking at a snapshot at a point in time for a financial year.
Yeah, thank you. It's a rather remarkable performance, I would say.
Excellent.
I'm happy to move.
Right. Right. So the recommendation is that we receive the quarterly finance report. Moved, Councillor Mel, seconded, Councillor Rachel. All those in favour, please say
Aye.
aye. Carried. Let's now move to the annual tax update, and we've had a little bit of a look at this already. So let's move now to page 67. And are there any other questions in relation to this? Councillor Rachel.
I have a brief comment, if I may, not a question. I just, on page 69, I found this a really interesting report, so thanks to officers for the provision of it. And I know that there has been some conversation at various times around how local government is funded and the idea of returning GST to, local government. And I think, Madam Chair, that capital grants and operating grants from central government total around 26 million for maybe the last year. And yet GST paid, so I guess money's taken out of this community in the forms of GST, specifically relating to Nelson City Council, 42 million. So a lot more is being sucked out than is coming back in. I just thought that this might provide quite a good basis for some advocacy on that matter. And it was just a really interesting read.
So that's not correct, is it? 42 million taken out of GST?
20.4 in output tax and 22.1 in input tax.
It would just be the top one, Councillor Rachel. It's only the output tax that's taken out of the community. So it's not together. You don't read it together. They balance each other out. So not quite that much. Okay.
Yeah.
Prabath, that right?
Yeah, through the chair, yes, that's right. GST output is what we pay. So GST input is what we claim. So the net amount would be the real impact.
Yeah.
That's correct. Thanks.
All right. So we're now, are there any other matters people want to raise in this very good tax report? Right. So we have a recommendation that we receive the annual tax update and its attachments. Moved Mayor Nick and seconded Councillor Rohan, and all those in favour please say aye. And given that we have one more report before we go into confidential, I'll take a break at that particular time if that's okay with the committee. So the next report that we have is the bad debts write-off report. It's on page 79. Prabath.
Through the chair, I'll take the report as read and happy to answer any questions you may have on that report. Thank you.
Seems eminently sensible.
Happy to move.
Right. Moved Councillor Rohan and seconded Lindsay that we receive the reports debt write-off for the year ending 30th of June 2024. All those in favour?
Aye.
Carried. Okay. We now recommend that the Audit and Finance Committee exclude the public from the meeting, and I'd like somebody to move that. Thank you, Councillor Mel. Seconded Mayor Nick. All those in favour? Aye. We will now move into public excluded. We will